Welcome back to another episode of Profitless on Purpose, the nonprofit accounting podcast. I'm one of your hosts, AJ Wheeler, and with me as always is Mark Palardy.
Hey, everyone.
Got a great show, a couple articles. We have donor modeling for upgrade propensity. What does that mean? Well, it's scoring. It's a method of scoring your donors and finding out if you can get more moolah out of them. We'll talk about, kind of what we think about that. It's a really interesting article. We'll dive into what the methodology is, what they're talking about, maybe a little bit about how you rank your donors, but we'll talk a little bit about that. And then our second article is anything scarier than a new nonprofit CRM. We're talking donor databases, people. Your development department wants to put a CRM in. What are the good questions you should ask? How it should work? What you should be looking for in a donor database or a CRM system? Understanding the needs of both the accounting system and the development department in that query. But yeah, we'll talk about CRMs and donor databases ad nauseum today, but I think it's a good conversation. And then 10 nonprofit funding models from our favorite social Stanford Innovative SSIR review. That's what it is. And this is really breaking down, this is going to be a two-part series, but this is our first part about breaking down the types of revenue generating activities or kind of categories your nonprofit could fall into. We'll go over the first 3 or 4 today, and then next week we'll finish it up and kind of bring it all back around and understand where your nonprofit sits and how it earns its money or how it gets its revenue sources, and really understanding what that means for your organization and how to bring in more donations. Things you should be asking yourself if you're in the nonprofit space and you're working in accounting or development, understanding how your nonprofit sits in that funding model. So it's really interesting. We'll get into it this week. And then question of the week, what are the best practices and how should you use like a prepaid spending card or a credit card in your nonprofit? Are you using a credit card for expenses? How are those being approved? Who should have access to them? What are some alternatives? We'll go through all that this week, but Mark, you got our first article. Take it away.
Yeah, thanks, AJ. This one is from Nonprofit Hub, and it's called Donor Modeling for Upgrade Propensity. So the purpose of this article is kind of to talk about how one can use modeling, basically statistical models to help you better determine and focus your energy onto how to increase your donors, your donor giving, right? Obviously, you could run many kinds of models as to how to get more donors, how to kind of bring more money in. But the purpose of this is to actually look sort of at a case study for a specific model that they use to try to determine if large gift donors could give more or would give more, and reach a certain threshold. So they had this threshold of, say, $1,000 a month, a year of giving, and they called these large donors. So they had all these donors that they basically had at close to the $1,000 mark, and they wanted to determine if they could get some of these donors to extend themselves to give more to kind of reach that $1,000 threshold. And they kind of did this model to determine, and it felt like a controlled study where they looked at, they did a year where they did nothing at all and just wanted to see, without any activity, without any action whatsoever, would these people who were close to 1,000 up their pledge and give more. And then they looked at, once they started instituting the model and seeing if they were actively engaged, would these donors then bump up? And probably no surprise to anybody listening to this, the more you engage with donors, the more they're going to give. And so they were able to find actually quite a nice return rate if they touched and reached out to different donors and convinced them to bump up their pledge to the next level. So a lot of this, I think the underlying piece to this donor modeling is to figure out how, as a nonprofit, you can effectively deploy your resources. And are you actually using your resources wisely? Like, does it make sense to have people on your development staff try to nurture more people who are going to give $20 or $50 a year to your organization? Or does it make more sense to try to use some of those people to get your people who are already in the system who have already bought in to increase their pledges. And then, of course, you want to also watch that you're not stressing the donors to a level where they get turned off, right? Where it's just this constant money ask, where you're just constantly being harangued. So donor modeling could be used in a number of different ways, but I like this case study because it actually makes me think, especially like I'm working with some nonprofits now, and it's like, I don't think anybody is using donor modeling, but I like this kind of approach of using controlled studies to see what we can do to increase the donor base that we have, or increase the giving of the donors that currently exist. AJ, what are some of your thoughts?
Yeah, well, I thought this article was very interesting because in the 10 plus years I've worked with nonprofits, I've never seen I'm not aware of a development department that deploys this kind of modeling and like research in their donor database. Usually the donor database, and we'll talk a little bit more about CRMs, whatever they're using to track donors, it's mostly to know how much they're giving, how to follow up, how to organize them, who they should be reaching out to when they have new programs and stuff like this. But and then the real successful ones implement new programs like, oh, you don't have a bequest program. Let's start talking about, planning for large gifts when somebody passes away or whatever, to continue their legacy of giving, or casting a broader net and trying to bring in more donations, and not really working with the donors working with the donors they have, of course, acknowledging them, continuing to send out ask on a yearly basis, but never trying to change the level of donation that a certain donor is using. And then quantifying it in this kind of like scoring system that they have is really interesting. I wish the author would have maybe provided, like, of course, the accountant and Excel nerd in me wants to see her model and take a look at it, and how, she kind of describes how they score and how they pulled the information from for the model. But I'd love to see a working, like version of this, because I think it's a very interesting concept that I haven't heard much about. Now I'm an accountant. I'm not much in the development side. So maybe this is an old like donor value score, but I've just never heard of it before or been involved with a nonprofit that uses it. And it sounds like it could be enlightening, or at least give you some insight. Maybe it's not something that you do every year or that you metrics out, every donation cycle, but maybe it's something that you visit every 2 or 3 years or something like that, or, and kind of see if you can move donors to a higher level. I think it sounds genius, but without seeing the nuts and bolts of it, I don't know,
I'm with you, AJ. I think, obviously as an accountant myself, information is power in this regard. I think that the piece though, right, they don't really tell you, was this a self-created model or did they buy a modeling program from somebody? And I'm sure there are people out there who would be more than willing to sell your nonprofit a modeling program that costs you an arm and a leg. But if you're a small nonprofit out there, even if you don't get to the level of I'm going to create a model for this, I think it's a really good reminder to be keeping notes, maybe even to be keeping an Excel spreadsheet where you're talking about what tactics you're using and what works with your specific donor base, right? Just tracking from year to year, we did this and this worked. We did this and that didn't really give us much of a rate of return at all. That is kind of the step on the path, I think, to getting toward this modeling idea. Once you're at scale, right? Once you get up into the millions of dollars and you really want to start, fine tuning the numbers, then this modeling idea really could come into play. But I think up to that point, as you're growing, at least tracking what works and what doesn't, and where you want to spend your development dollars, because clearly everything you do has an opportunity cost and has a real cost in terms of payroll. So, AJ, I think you've got our second article for us.
Sure thing. So our second article from Nonprofit Hub: is there anything scarier than a new nonprofit CRM? So the whole article just really kind of, I don't know if you can call it a deep dive, but it's really centered around your CRM, which is customer relation management software, I believe, if I've got the acronym correct. I'm sure CRM fans will be exploding in the comments if I got it wrong, but
I think it might even be contact relationship manager, but yeah.
Okay. Yeah. So essentially in a for-profit business, these are really handy if you're a, retailer or something like that, a direct to consumer kind of thing. It's really customer management, realizing the who, what, how much they spend, that kind of thing. For a nonprofit, we're really talking about a donor database. We're really talking about, your donation, like database of who's given to your organization. So that, donor database, CRM, and a nonprofit, I think kind of are interchangeable. Anyway, they get into like how a CRM can benefit tracking donations and campaigns, and being able to bifurcate who donated to what campaign, and automating acknowledgments and receipts, and being able to have like a database that you can pull easy reports from, and rearrange information and kind of track different metrics of donors, that kind of thing. So and even tracking volunteer hours. So they, of course, you want to have, if you're a nonprofit that's moving from that small kind of starting phase into the next phase of being a good sized chunk, and you're taking that leap to $1 million, 2 million in revenue over the years, and you're highly donor funded, then a donor database or these CRMs, I think, is really necessary for you to manage that, to help your development department or whoever's doing the donation management to really make it easier instead of just tracking in an Excel. Now, if you only have like 100 donors a year, maybe Excel is a good alternative instead of really shelling out the money, because spoiler alert, these cost quite a bit. So they kind of get into why, it's a good investment. You really can, they say strengthen donor loyalty. So they treat them like a valuable asset, and being able to realize, how much they've paid and thank them and give them, their donation receipts on time and stuff is really, why you would want to invest in it. And they talk about data-driven insights that you can glean from a CRM and reports. They claim it leads to higher productivity and efficiency. We can get into whether or not we think that's true or not, but that's what they claim. And then access your info from everywhere. We're a big proponent of cloud-based or remote accessed information. And these CRMs, these current CRMs, are no different. They're usually web-based, and you can jump on and see where things are, even if you're across the globe or across town. So, and then they kind of talk about how you would think about what CRM to get and the questions you need to ask. So I won't go through all of them, but, like understanding what you want to track, what kind of fields, and how customizable is the platform. And then how much is the thing going to cost? Because there's a lot of alternatives out there, and the nonprofit space has numerous different ones. I mean, there's like Little Green Light. I think they changed their name. There's just, Salesforce is one that I've seen used. So there's Cloud Stack, that in fact, this kind of article is shilling for a little bit, but there's all these different kinds of CRMs, and they come with different bells, whistles, and costs. So really weighing that into your plan of getting that there. And then the other thing to note is getting your current donor list into the new CRM or whatever system you're using, being able to transfer that information to whatever new system you're implementing. Can you, like, if you've been doing it completely in the accounting software, I hope you haven't, but if you have, can you export that stuff to Excel and bring it into the new CRM is stuff to look out. So, and then they talk about the real features you want to see. And I think we've kind of gone through them, the donor management side, the data-driven insights and reporting that you can get, how easy it is to pull out information out and put information into it, what kind of level of authority you have over it. So I have some soapboxy kind of ideas on this, but Mark, I'll let you chime in and kind of give your 2 cents first here. I have a feeling pennies will be flying everywhere, throwing their 2 cents in here.
Yeah, right. Well, we're going to need some of these pennies if we're going to afford a CRM system, because frankly, they can be ridiculously expensive. I've worked with companies, we're talking $700 to $1,000 a month for some of these programs. And, there's lots of bells and whistles. I will say one of the things that I think is really important, coming from an accountant's perspective, because that's what we do, is integration, right? Because you want to be able to pull some of this data out. You don't want to have to repeatedly enter stuff into your accounting system that's already in your CRM or vice versa. I know AJ talked about getting it started and extracting data. I think once you're up and running too, you want a system that's going to be able to interface and talk with some of your other systems, or at least have some workaround where you can export it to a CSV and then get it into your accounting system, because otherwise there's a lot of double duty happening with entry, and you can certainly make some fat fingered errors in that case. One thing I do want to mention, because I am a big proponent of CRMs, I'm going to harken back to a resource we've talked about a number of times on the podcast. I looked last night after reading this article on TechSoup, and they definitely have quite a few CRMs that are available for nonprofits. For those of you who might not have heard of TechSoup before, that is a technology website where you can go on, sign up, prove your nonprofit status with a 501c3 letter or whatever, and then you have access to cheaper forms of software. A lot of them in the CRM space are just giving you discounts on annual ability to subscribe, like Donor Perfect. That's one I hear a lot in the space. Managing CRM software. It's also an expensive one in the space. HubSpot's another one I saw on there. They have different integrations. They'll tell you what software it works with, and on some of these you can probably even get a 7 to 14 day trial, so you can try out the software on a sample donor list, so that it makes sense to see how it works, because once you get the CRM, you actually have to train your staff to use it. You have to get buy-in from people who might have been doing it a simpler way. If they've been doing it off of Excel spreadsheets and all of a sudden they have to manage a donor database, that's a whole nother ball of wax. So, I think CRMs, more than just a donor database, though, they're really a great way for you to track all your interactions. I know Salesforce does this very well. Anytime you make a call, anytime you send out an email, anytime you have a touch point with a donor, you have a record of that. That can help you both in seeing what your response rates are, but it can also help you knowing, like, oh gosh, we've contacted them maybe a few times too many. Let's chill out on the next campaign and not push so hard. So there's lots of things you can do with a CRM. Again, check out TechSoup and see if there are some. They have different plans that are different sizes, so some might be priced right for your organization, what you can afford based on how you're growing and expanding. Because the better you have contact with your donors, frankly, the faster you'll grow.
I will say, Mark, that I think that CRM, in my experience, sometimes, especially in a small nonprofit, it can be kind of up in the air as to who manages a donor database software. But I want to make it clear that I think that should be the development department. It should be outside of accounting. And there's a couple of reasons for that. First of all, the accounting system should stand alone. I personally feel like the donor database system and the accounting system should be separate and distinct. And there's a couple of reasons why. Donor databases or CRMs or the development department have different needs out of the software than you would as an accountant. And the other part is if you're under audit or if you ever need to prove donations coming in, it's nice to have a separate, distinct system that tracks donations that you can reconcile back to the accounting system, because the motivation of the development department is different than the accounting department. The motivation of the development department is to mark down every piece of revenue that comes through, or the piece of contact that they've had with a donor, to try and justify their position, for lack of a better saying. Whereas the accounting side really needs to record the revenue that's recognized and coming in, and working with the development department to understand who's pledged money. When do we recognize it? Do we recognize it when it's pledged, and then have to write those off for people that say, sure, I'll donate $500 and then get rid of it. Having a system set up with the development department and being able to reconcile their records, books and records, to the accounting books and records makes a huge difference and makes it easier on the accountants, on the auditors, if you have to do that, than going through 5,000 different individual donations to prove that they've actually come in and been received. So that's my kind of soapbox on it, and I think understanding, the the amount of work it keeps to keep one of these things up and running. This is not a set it and forget it kind of thing. Just like the accounting system, your policies and procedures and your bifurcation of donors needs to be looked at, I don't know, every year maybe when it first starts, to make sure that you're kind of capturing all this information that you need to. But every couple of years, at least, if you're a mature nonprofit, to make sure that you're not missing anything, or that, like, you've purged the systems. Gosh, I shudder to think of, like, you got a big bequest from somebody, and then you can continue to send out, donation letters asking for donations for somebody that's no longer living. And, like, being able to cross a donor off if they have passed away or no longer is donating, so that you're not annoying somebody, or like having excess donation mail and updates going to somebody. So that's my 2 cents on it. I just think, they're great. Like anything, it's a great tool, but if it's not implemented correctly or used correctly, it can be your worst nightmare too. So just keep that in mind with these CRMs and donor databases. Mark, you got our next article for us.
Yeah, thanks, AJ. Actually, well put on that. I 100% agree with what you said. So our next article is from the good folks at Stanford Social Innovation Review. This is a bit of a meatier article, as we like to do. We're going to split this up in 2 weeks, and you'll see why in a moment. The article is called 10 Nonprofit Funding Models. And the article actually is an interesting way to think about who your donor pool is and how your organization is receiving money. As nonprofit leaders in the space, we're much more sophisticated about creating programs, creating projects, but not as much so about where the money is coming in, right? Often it's just take whatever money comes in, we'll use it. And often you're not, as an organization, stopping to think, what is our specialty? How do we get people to give us money? So this article kind of lays out 10 different funding models, of which each individual nonprofit is going to have their own blueprint, right? You may have 10% in column A, 60% in column B, and the rest 30% in column C. Coming in as funding sources. But as you start to kind of look again at where the money's coming from, you can figure out how to deploy resources. And if you're seeing, well, we're getting more revenue from these sources, maybe I want to devote more time, more energy toward getting that beefed up. And a lot of these models that, they admit in the article are kind of at scale where they're talking about, what do we do at the $50 million mark? So you're talking pretty and above. So we're talking pretty significant nonprofits who are bringing in that kind of money. And below that level, they say you can often just get money from whatever sources are coming in, but there still often is a target level that you can shoot for, so that you can get to that $50 million level, so that you can kind of get into your groove of what is going to be the best way to sustain and grow for your organization. So the idea behind this is that the beneficiaries of your nonprofit work are not necessarily customers for you. They're people who are getting value out of your organization, but this isn't the economic engine. So we're like, if you're working in a for-profit organization, if I'm running a restaurant, my customers are bringing in my money, right? So I'm selling to them, they're buying food from me, and that's how I'm making my money. But there's this disjoint when you have a nonprofit where I have beneficiaries who might not be contributing financially at all to the organization. And then I have this other pool that is the funding sources. So it's a disjointed way. It's often why people who are coming in from the for-profit world to work in the nonprofit world have to really readjust their thinking and really start to consider different aspects of this. Like, how do I help the most people on one hand, and how do I bring in the money on the other hand? So that's kind of the idea behind these funding pools. So let's just get into we're going to do 4 today, and then we'll do the other 6 next time. So when we're talking about these funding models, we're going to be looking at three different parameters. So the source of funds, the types of decision makers in bringing in those funds, and the motivations of the decision makers who are giving the funds. So number one non-funding profit model is called the heartfelt connector. And I'm going to give you some examples of these that you might know about that'll help make more sense to you. In this case, let's think about Make-A-Wish Foundation as I kind of described this. So this focuses on causes that resonate with existing concerns of large numbers of people at all sorts of different income levels. So, with the Make-A-Wish Foundation, it doesn't matter if the donation is small or large. Everybody wants to help, fulfill a wish for somebody who is dying. And often those are kids. Another one is like the Susan G. Komen Foundation. They have a very specific heart connection to people who, have had cancer or have family members who have had cancer. And they really are trying to create these connections and ask people to give. And so those who are considering kind of expanding in the heartfelt connector space, you're going to want to ask these kinds of questions. Do you have a large cross-section of people who have shown that they will fund causes like yours? Can you communicate what's compelling in your nonprofit space in a simple and easy way, right? It's got to be a super clear, concise message. And is there a natural avenue to get volunteers and to get donors, and so basically you're wanting to have a cause that's going to be easily accessed by a lot of people. So that's funding source number one. Funding source number two is a beneficiary builder. And in this case, we've got organizations such as hospitals and universities. So the vast majority of their nonprofit funding comes from fees that beneficiaries pay for services that the nonprofits provide. In the case of a hospital, that's pretty obvious, right? But the total cost of delivering these fees, right? This nonprofit hospital that's delivering fees is actually making a lot of their revenue from donors, not from the actual services they're providing. So that's why people want to give, right? Because they've had a relative or a friend or themselves go to that hospital and directly benefit from the services there. And as a result, they want this nonprofit to continue to exist and to continue to thrive. So they are going to give extra money toward that. So does your mission create an individual benefit that is also perceived as an important social good? That's what these beneficiary builders do. Do individuals develop a deep loyalty to the organization in the course of receiving your individual benefit? If that sounds like you're a nonprofit, then that's probably the kind of money you're going for. All right, so number three on our list. And AJ, feel free to jump in if I'm chatting too much, but I think we're...
No, you're good. I'm biding my time here.
Okay. Number three on our list today is the member motivator. And so in that case, we're looking at, oftentimes religious organizations, churches, and their feeling is that they're integral to everyday life and something from which people draw a collective benefit. So this could also be arts organizations, environmental organizations, and the humanities, but oftentimes churches are seen as this, and the questions you're asking in this case: will our members feel that the actions of the organization are directly benefiting them, right? Even if that benefit is shared collectively by a whole group of people. Do we have the ability to involve and manage our members in fundraising activities? So can you really engage people? There are clearly a cross-section of people who give that are turned off by these organizations as well, right? In the case of environmental organizations, if you have somebody who just is not into that at all, they're going to find this message, anathema to them. So you're trying to find the people who connect with what your mission is on that level and feel that there's a collective social benefit. So can you stay in tune and connected to your membership? Because this is going to be one of those things where you kind of constantly need to be giving benefit to people, and you need to keep your reputation as such that there's this collective benefit going on. Because if your nonprofit becomes not so squeaky clean, it becomes harder to, that really will affect your donor base. And then the final one I want to talk about today is called the Big Better. And so this kind of organization gets its funding sources from one huge foundation or very few individuals. Oftentimes that primary donor is also a founder of the organization, and they can be focused solely, often it's going to be on medical research or something where you're looking at specifically funding, by some big foundation, and they have a nonprofit arm of something they're funding and they want to see move forward. And the questions we're asking here is, can we create a tangible and lasting solution to a major problem in the world in the foreseeable time frame? Can we clearly articulate how we will use this large-scale funding to achieve our goals? And frankly, are there any wealthy individuals or donors or foundations who are interested in the work we're doing? So that's just 4 ideas for different funding sources. Again, there's a lot we didn't cover because there's 6 more coming next week. But AJ, I'm curious what you think about some of the things we mentioned so far.
Sure. I like how they're so when I was reading this article, I was really thinking about, like a nonprofit really taking, note of how they're funded, what their funding sources are, and then what bucket that fits in, and how this article really tries to drive down, like the strategy behind that type of giving or funding. So I'm really excited to go over the other 6 next week, because I think we can kind of then do a recap and kind of like but I'll give my opening thoughts where I think, like you probably there might be some nonprofits that solely fit into one type of funding organization, but I would say the most successful ones that I've seen have a little bit of like a Neapolitan flavor to them, where they kind of, like strawberry, maybe the grants where, nobody eats that, everybody eats that last, and the chocolate and vanilla are your donors, but to be realistic about it, I think, like there's very few, I think, that fall into like the last one that Mark was talking about, where it's the big better, or the large like funded, arm of a foundation. You're talking about, the Bill and Melinda Gates Foundation or the Clinton Foundation or something like that, where it's got big money behind a large donor that's usually a founder. There's just a few of those, and so usually when, and especially probably a nonprofit that listens to our podcast would probably be more in the realm of, they have like some donations, they have some grants, they have some, kind of fundraising activities like a gala or a membership donation or something like that. So I think it's really interesting the way that they're breaking these down and really codifying these different types of donations. And it makes a lot of sense to me. I think the real crux of what I would get out of this, or what I would try to deliver to our viewers, is to take a look at your organization and find out how many different personalities or donor kind of strategies or funding strategies you have, and which ones you fit into. And then really knowing your nonprofit, that's a way you could really grow, is knowing how you're bringing in, what you're successful at and what you've levied. And then maybe if you have some, flavored strawberry ones that you don't, like you wait till the end, or they're very hard to get or something, maybe this can help, generate ideas of how those can become, equal. Because realistically, what we're talking about here is, grants, donations, and other funding sources, they kind of ebb and flow through the different market variations. If we're in a recession, you get less donations, but maybe more grants, from a funding source of a government entity. Whereas maybe if we're not in a recession, there's less need for governmental grants to come out, and then you can expect more donations coming in. So I think realizing market forces and understanding what type of funding sources your nonprofit has, I think is vital. And I'm really excited to go through this article.
Yeah. Shots fired against all you strawberry fans out there. Apparently, AJ is not the fan of strawberries today. Anyway, I think great points, AJ. I think one other thing I want to point out, though, is some of these questions that the article asks are also a great way to determine if this isn't a funding source for you. Because I think sometimes using your resources to try to figure out, and then you just go scattershot and you're like, we'll try a little of everything. But if you start reading this and going, well, this doesn't really sound like it fits our organization at all, then you can actually, again, utilize your time and resources to focus on those areas that you think you would have success in.
Yeah, and I think understanding the delivery of your services or the reason for your nonprofit is a really good metrics to stand on or to kind of look at, because, like, spoiler alert, there's going to be one that's called policy innovator later on. Maybe you don't even work in a field that has policy. If you're a church, or maybe a church isn't a good one, but if you're in, like, I don't know, I'm trying to think of what, like, you're into saving the environment, you're not doing a lot of policy work behind it. Maybe your organization just works on remediation of environmental, and so you don't have any policy attached to that. Or, you're a recovery center. What kind of policy? I mean, besides, like decriminalizing drugs or something like that, your policy work isn't a heavy part of your organization. So understanding, like, I guess, we always talk about it, linking what you're doing with where your funding sources are coming from. Some organizations, like, let's go back to the church, may not ever get grants. So you don't have your funding sources would never interact with grants. It is just donation driven. And then you can really look at those types of, funding models for your organization that center around just donations and bequests and stuff. So I think I am really excited to go through the other 6 and maybe recap these 3 or 4 that we did today and kind of bring it all around in our next episode.
All right, that does it for our articles this week. Thanks so much, AJ. And I think you have our question for us.
Yeah, so this one comes in. It's an interesting one. So it revolves around use of a credit card. It really, we'll get into a little bit of payment like controls, but it's really about a control situation. So the question comes in: how should a nonprofit handle paying supplier invoices using a credit card while also keeping the credit card information safe, is what they're talking about. And so they're a small charity that has a credit card. It's very small limit, $1,000 on it. And they have members running around doing approved work, in this case, like buying, supplies essentially. And then when they show up, they're paying the invoices out of their own pockets and getting reimbursed for it. And they want to know if there's a solution, like they get reimbursed via either a check from the nonprofit or from, like addition to their payroll, being run through the payroll system. So they're wondering if there's a way, or if there's some way that they could lock down, and what the options are for either allowing people to spend on the credit card to be able to purchase these things and not have to go through the reimbursement process, or if they should funnel everything back into themselves and essentially have these members, bring their expense, purchases to the person that holds the credit card and restrict the spending to just that one person. So that's the question. They don't want to babysit people, but they also want to have some limits on, who can spend on what, and have some kind of approval and control process over what's being spent and how it's being spent. So, Mark, I'll let you jump in and give your thoughts on this. I have some myself.
Yeah, I think, there are solutions out there for these kinds of things. Credit cards, certainly you can have solutions just by raising and lowering limits and having different limits for different people. You can also have, purchase cards, which basically, a credit card, you can just keep running up the balance. A purchase card, you're paying off every single month. And there are some solutions there in the space. I don't know if we specifically want to give any brand name, but there are ways you can do this where you are specifically reining in the spending. Obviously, if somebody goes hog wild and spends on a whole bunch of things in a specific month, and they go up to their $500 limit, and they weren't business expenses, there's a larger conversation to be had there. But I think if you're managing and looking at this every single month, and you have to have some level of trust in your staff, and you have rules and regulations and codified what business expenses this is expected to be used for, I don't think you're going to run into as many problems as you think you are. You just need to be on top of it and be managing it every month, and make sure that any expenses that are purchased, that there's a reconciliation that comes every month from the employee to explain what the business use was of that purchase, or if there's a meal on there, who did they have the meal with and what was the business use of that meal, right? And have specific expectations and have receipts, right? Because you don't want people just going out and spending willy-nilly. I mean, the other thing, which I'm sure AJ will talk more about, are prepaid cards that are going to, cut off and just not even work after a certain limit. So yeah, I mean, there are ways to go around doing this. I don't think it's too difficult of a problem, and some innovative solutions as well. And then there's a lot of companies out there who have people use personal credit cards and then do a reimbursement every month. And some employees love that because then they're getting miles. But the accounting department, it's incumbent on them to make sure that these are all paid back in a timely fashion so that people aren't incurring interest expense on the company's behalf. That's bad. Anyway, back to you, AJ.
Yeah, I think my take on this is it really matters how big your organization is. I want to first start out by saying that credit cards and like these prepaid like debit cards essentially, or prepaid like spending cards. I don't want to use the word debit card because I'm about to trash them. But credit cards and these prepaid spending cards really are the way to go. And the reason being is you can stop somebody from fraudulently using it, or you really minimize the risk of loss by using a credit card or one of these prepaid like spending cards. I've seen nonprofits do it and use debit cards that are hooked up to their business accounts, and it's a recipe for disaster. It's essentially giving cash access to cash to whoever has that debit card. Okay. Exactly correct. I mean, you really have no way to monitor what somebody's, to cut the losses with a debit card. They have access and can spend up until what you have in the bank. And so that would be my first caution, is to not use debit cards. I've seen it done before. There's policies around it. I mean, you can do it, but it's not a good idea. And in best practice, it should not be used. The other two options, the credit cards and the prepaid spending cards, or like a line of credit that you can use that has cards associated with it, really makes it easy for somebody to manage that. And I would say those are probably more robust solutions to the problem, of how much and who should have these cards for a larger organization. I would say the easiest thing, if you're like a 5 or 10 person, office that's running this nonprofit, I think Mark's suggestion of having somebody, if they really need something that needs to be bought right away, use your own card and submit for reimbursement with a receipt and have it approved by somebody that's in the know. So my first suggestion is to have policies and procedures and really think about how you're going to do this. Is it using, somebody using their personal card and getting reimbursed for it, and then having that approved and run with payroll or once a month, how that works? Or if you have a credit card like the person that wrote in did, I think it depends, and you should really have a written policy on how it's done. I would say, for my own, being risk averse, I think their option of having all of the purchasing come back to the person that holds the card is probably the best, idea, because then you are the person that with the authority to spend is seeing the need and what is being bought in each instance. You can accomplish that if you have multiple cards by reviewing it at the end of the month and matching up receipt with expense and being able to approve it. And if it's not, asking for reimbursement back from the employee for a personal charge that was made on a nonprofit card can happen, and you can restrict that through their payroll, or have them bring in cash or whatever it is to repay the no that they did. But essentially, I think it really depends on size here. If you're only issuing 10 at maximum 10 reimbursements a month, that's probably the way to go. If you have 100, 200 employees and you're having to manually do reimbursements for each employee that spent, their own funds, or reimbursing them for mileage or something a year, I would look into some kind of other reimbursement software or something else that could help you manage that. And you're at the size where you should be able to afford something more robust than an Excel sheet and a stack of receipts, and having it go through the approval process there. There's technology out there that can help. I can say there's more than one option out there. There's lots of different companies. We probably won't name any. I've worked with a couple different payment platforms that are either prepaid or, quote unquote, a company charge card that gets paid off on a monthly basis. And there's some good options out there. I would just say, look at the fees, especially in a nonprofit situation, look at the approval kind of matrix on approving expenses, if that's available, or the review process of that, or the codification of what grant or program the expense is associated with, so that there's not additional, qualification, there's not additional work on the back end of the accounting department to have to code that stuff and send it back out for approval. So I think those are all good things to look at, but specifically with who can access it, you really need to have it written down, thought about, and, updated for when people leave, move on, new employees are hired on who can do this. So really having a control structure written down, I think is the best piece of advice I can give.
Yeah. And sort of ancillarily to this, which you'll also want to think about in your policies and procedures, is how you're recording these credit card charges in your accounting system, right? Are you actually recording each individual charge? Are you recording them as a lump sum by GL account? There's different ways that different companies do it. And often, sometimes you will see companies say, well, I want each individual charge in there so that if there's a problem with one of the vendors, I have a record in my accounting system of what each of the vendors is. That's time consuming, right? So there is a trade-off there. So just kind of, this is probably a different conversation for a different day, but make sure you have policies and procedures on that, because there are a few different ways to go about doing that when it gets to actually getting those charges into your system.
Yeah, and I might also add, be leery of hooking your credit cards up to QuickBooks. QuickBooks, I don't know what it is about banking APIs and credit card APIs. It can monkey wrench your whole accounting system when you try to do this, where payments only come in on a top line and then everybody's individual cards just show charges and you have to net it or move stuff around. So it can be a real pain. Like, before you just think turning on an automatic feed for a credit card or bank account, really think about how, research how that's going to affect your accounting system. And if it's out of control, turn it off. Don't let the problem linger, please. Or you're going to pay somebody to come and fix it a lot of money, because it can be a nightmare.
Amen to that. Okay. Speaking of somebody who's lived that nightmare. All right. Well, thanks everyone for joining us for another episode of Profitless on Purpose. We really appreciate you being here. Of course, reach out to us on the web. Comment to the YouTube video below. If you're watching this on YouTube, tweet at us at ProfitlessPod. On behalf of AJ and myself, we really appreciate you being here, and we'll see you next time.
Thanks, everybody.